Good morning. Today is the 7th day of March 2017. Welcome to today's technical analysis on the daily silver chart. My name is Derek, and this support line connecting these lows taking down today as well as this current level of support area, looking to make a test of this mark here. With that test in place, how is this going to hold up? The most probable one is that it bounces to this point from here. But if this area is not found as support, then what would the next key level become? We can use some Fibonacci analysis to get some more information. We got a low of 1568 and a high of 1854. So therefore, the number below 1739 would be the 38.2, 1672. So the next key level of support could come down here. And why this is important is because if this level fails like fast and you start to see it coming down to here, don't think that this level here is down too much, because it's could easily come here. Now, with that being stated, because of that, it can come down here, up to here, and then work its way to that point. So how this level works out, but usually when you don't find support where you're supposed to, it either means a fast move to the next level or you're going to resist it. Usually those are the key ones. So that is the analysis within the silver market. As far as further upside movements is concerned, the key will be from this high to whatever this low happens to be on any upward corrections when they do occur. As far as the sideways range is concerned, it could even extend it out further. That still could go sideways. It's in the establishment mode. Is it going to establish the support, move here, something like that, and then breaking below, there's your bear market. And I also have failed break as well, because now that I know that this is a clear break below the support, if this thing rebounds relatively quickly back into within this range, then it's going to be looking like a failed move. But that's on the if case scenario, but it already has had a significant break below the last few days support figure. Now, as far as if I was to be trading this on a day trading day by day level, where would I be buying? Where would I be selling? And this is assuming that the commissions that I pay are practically very small, close to nothing, and you have to have a decent amount of supply to be able to do such. But what I would be doing is, say, starting back here, okay, this is what I want you to do. I want you to day trade this silver market. You're obviously going to be holding the physical, but on top of it, to earn extra equity on the short term, midterm, this is the mechanism that I'd be using. So I need to be buying digital fake silver, we'll call it, but I don't have any, and I have fiat dollars. So what I would need to do is turn those dollars into fake silver, and I'd have to put buy orders in. And I'm going to use the color black to indicate where I'd be buying. And I would just be buying every time it goes down a bit. Usually I would use key Fibonacci and other key levels along the way, but even if you don't know them, this would still work. And then as it's going up, I'm going to want to sell this at a higher price. So let's sell it here, maybe have a sale in here. And now I've only got one position left, but I'm going to buy when it comes back to where it was before. And I probably have a buy order down here that wouldn't get filled. So now I have two orders along the way. And I could probably pick up another one in here. In fact, I'd probably have it right at this low. And then you can have a sell order up in here. Let's put that in red. And then you'd be buying all the way down. So you'd be buying, well, here at the previous low, maybe here, maybe you buy here. And then if you do that, you got a lot of positions, and you're going to look to sell up here. But when you get a candle like that, that's a gin candle, because you sold up here, then it goes all the way back down, and okay, well, that works out fine, because now I can go ahead and buy it back where I did before. And when you see this, now you're noticing a range, so you're going to keep on buying at the same prices, and then you're going to keep on selling at the same prices. So anytime you hit that range, you're basically going to win, and it's going to break the range one side or the other. And in this case, it obviously broke it to the upside. You'd have sell orders up here, buy orders down here. So that would mean sell order, maybe sell order, maybe sell order. So you sold 3, you want to buy them back cheaper. So I'm going to buy here, maybe buy here. And then the same range game is going to end up being noticeable from the start, because once you buy here, okay, let's put a sell order in. And hopefully you're going to be lucky enough to get, or be able to get the top of this range, and you probably should. So you'd end up selling up in this area here. And then you might miss some of these range points here. Maybe you get them, and a lot of times I miss them. And then you sell, and then you're going to be buying all the way down, and so on and so forth. Within this run here, this would work out really well, because every single time it goes up a little bit. Say you sell here. I sold at 1756. Okay, let's buy back in at 1726. And then when it goes down there, 1726, I just got it. Okay, I'll sell for 1756 again, and so on and so forth, which means right now, after this thing has been going down, this would have meant buying at the bottom under this range, maybe buying here. And if you bought here, maybe you got the sell up here, maybe you didn't, but then you would have just bought again. So now as it stands, I would use key levels, so I'm going to have a good buy order on the Fibonacci point. And then within the previous number that I gave in, we had, okay, so 1672 and 1631 would definitely have a buy order somewhere here, maybe even somewhere here, maybe here, and here. And as far as the sell orders are concerned, well, since I just bought this, I'm going to have to put a sell order. Let's put one here. Let's have one here, maybe here. And every time that you buy, you sell higher. And every time you sell, you buy lower, rinse, repeat. And that would be the strategy in which I would use on the day trading level. It's a strategy I am using on the Bitcoin exchange, and it works out to be a very good one, because the only way you're going to get your ass kicked if this thing becomes a broken chart and just goes down. Because even if it does this, you're going to buy a whole whack down here, but you're going to be able to sell a lot of them back in here. And it's if the market goes up, you're always going to win. If the market goes sideways, you're going to win. And if the market goes down, you might not lose as much, and you might even break even or have a small profit on a downtrend. Anyway, thank you for tuning in, and have yourself a great day. Bye-bye.